All right, so this video is going to go over the variable strategy that I personally use and how to set it up. So the reason I came up with this strategy is because that you always want to trade with the trend and you want to be able to capitalize on the bigger moves of the market. Sometimes, in the default settings, it can trade against the trend and it could work out for a little bit, but there's times where you can experience larger forms of drawdown. So to avoid that, I look at the EA a little bit differently and maximize on what can be done when it comes to trading with the variable software. So, as you all know, say if you're a little bit new to trading, the market moves in waves. So basically, what you would see is in an uptrend, you would be looking at a series of higher highs and higher lows. Then in a downtrend, you'll be looking at a series of lower lows and lower highs. So the way everything works out is that you want it to be to where the software is catching the moves that you want. What I mean by that, let's say this line is this red line perfect. So if in the default settings, say this is a high here, like basically before this happens, let's say that everything on the right side of this didn't happen yet. And the software is thinking that the uptrend is ending and it will take a place of sell, in this area here. As the markets go up, it could place another sell for that second level trade somewhere around here. So you have like drawdown leading up to that. Of course, it would get you out of the markets once the correction happened. But let's say, what if this correction took a little bit longer for it to happen? What if something like this happened to where the markets went up, a few more levels, and it took a while before you were able to win this trade. Say when it came down around here, like around here, it would have probably closed you out of the trade in profit. But you would have spent a day or two in drawdown in the trade. Now, the way I look at the markets or look at how to use the EA is I wanted to be able to take trades in the right direction. So what I'm looking at is, it takes a buy trade here, and then it finishes that buy trade around here. It takes another buy trade. It takes another buy trade. Oh, there's a little bit of a correction. Now, it may take a secondary trade here because the market's moving against it, but it only spends time in drawdown for a little bit of time before it continues upward. And then it keeps stacking. It keeps stacking orders. So basically it takes another buy, it takes another buy, it takes another buy, correction. And you're catching the market in its most probable and bigger moves in the right direction. So when you have that, that's where you're spending more time in profit than you're spending in drawdown. And that's the idea of what I'm about to show you. And sales is the same way. Say, you got sales and you're selling here, and then it takes profit there. It sells again, it takes profit there. Sells again. Now, there's a little bit of a drawdown, but that's no problem because it'll take its second order. It'll start to come even out here, closure and profit, and then it starts to continue selling with the downtrend, and you're spending more time. You're closing out of trades and profit faster, thus making you more money faster and compounding faster. That's what this will do. So not everybody is able to discern the trend just by looking at higher highs and higher lows. It takes a while before you can look at market structure without, any indicators, and just know which way the trend is going or what's the major trend. So what you could do is I have a set of indicators that we can look at that would help you determine which way the market is going. So let's use a marker that's kind of easy for now, just to make it clear. So the first indicator would be the Bollinger Bands. The reason the Bollinger Bands is so important is because there's two aspects of being able to trade: knowing the trend and knowing the highs and the lows of the market. So knowing the trend and knowing the highs and the lows of the market. So the Bollinger Band helps you know the higher and low of the market by kind of making it, it's a band basically. So a Bollinger Band is basically a standard deviation of a moving average, and it, portrays the deviation from the moving average in this band-like line. And the idea is when the price breaks out of the band, that it is now like overbought or oversold. Overbought if it's too high, oversold if it's too low. And the default settings to a Bollinger Band is usually 20. That's the default settings. But you see here, when you check, when it's at its default settings, it can kind of give you a little bit of confusion. You don't truly see the range. You see the little ranges, but you don't see the overall picture of the range. So what I do to combat that is I increase the range so I can see the large range of the market. So the large range of the market is with the 200. And for the most part, price trades within it, um, and basically trades at a certain direction. Now, that's for the range. The other part is knowing the trend. Now, in TradingView, there's an indicator that's really helpful for knowing the trend. And all you do is just type in super trend. So you go to indicators. For Bollinger Bands, you type in Bollinger Bands here. For the second indicator, you would type in is super trend. Use the first one. At the time of this recording, it's about 17,000 likes. So that's what you would use in your chart. So this makes it really easy. It's telling you which way the market is going. It uses a set of metrics to determine the trend, and it gives you a really easy visual on the trend itself. Now, with just this, the idea is to have the EA or variable trade while it's in the trend and has space from the next band. So for example, this is the lower band. It goes into a buy here. So you see that the upper band, let's do this. So you see that the upper band has some space. So you would set variable to buy, and then while it's at the upper band, you would kind of watch it to make sure it doesn't reverse. But as long as the buy is still going, you would let variable buy. And I will show you how to set variable to where you can buy only and only have it buying. But you would have space, the market's in the uptrend, you have space up here to capitalize and stack trades. So that's essentially what you would do. Now, the next idea of it, because you don't want to have just one thing tell you what you're doing. The second thing you want to have is like confluence. You want to be really confident in the trend. So what you do is you create symmetry, or you create multiple pairs of evidence that support your decision. So you basically need just a second indicator to tell you, to line up with what you're doing. The second indicator I like to use is the Ichimoku indicator. If I mute these out for a second, Ichimoku clouds basically tell you, give you an outline structure of momentum and support resistance with these clouds. You see here in a clear uptrend that the clouds are green. So you have a green cloud, and with that cloud is it gives you that confidence that the market is continuing forward. The second aspect of it, if I mute the actual price, is this aspect here. So these are like moving averages. So in TradingView, you have what's called the conversion line and the baseline. So the conversion line is the blue line. That's this one. Baseline is the red line. Now, default, you'll have something called a lagging span, but for this, you don't need it. So you leave it off. So that's your idea of the markets. That's your idea of what to do. You basically make the conversion line blue, baseline red, and you keep going. The idea is when the blue line is above the red, it's in an uptrend. When the blue line crosses the red and crosses below the clouds, it's in a downtrend. So if you combine that with everything that's on the chart, you start to create more evidence that the market is moving in a certain way. Now, it would take you probably a second to get used to the lines, but all you're really seeing is that it says buy here, it's above the cloud, and the blue line is above the red. Now, with the blue line, it's going to cross every now and then with the red line. That's why you're using multiple things. And I'll show you, what I would consider a change in trend. Now, if you just have the free version of TradingView, you're only going to be allowed to use 3 indicators. But if you happen to have the paid version of TradingView, you could add more indicators. And another indicator I like to use to kind of know the structure of the market, if it's an uptrend or a downtrend, is the moving average. So moving average, really simple. Price is above the moving average, is in an uptrend. The price is crossing back and forth between the moving average like this, and it's not going in any direction. That's consolidation. If price is below the moving average, it's in a downtrend. So what you want to do is you want to be able to find charts that have a clean look like this. So you want this to show up on your charts where you have a buy here, it's above the moving average, and it's above the clouds. So with all of that, you have a very strong area. And this happened, if you think about this, this this signal started on really started way back here, but let's just be fair and just start from here. The signal's buy area started from November 20th, and it went all the way until basically December 7th. So for 3 weeks, if you had variable stacking buys, it would have been buying and winning just on one pair for this entire time. You want your chart, you want to look for charts that look like that. Let me see if I can find a downtrend. So if I go here, and you see here, and also if you have a free membership, if you have a free membership to TradingView, you can kind of choose between, the Bollinger Band or the moving average. If you feel like the Bollinger Bands is too much, you can remove it and just trade the moving average. Just be wary of the range of the market, because the Bollinger Band's purpose is to show you kind of how, what the range is, if it might reverse or not. But as long, you can also kind of tell using the three indicators here. So either way you want to go with that, it's up to you. But the two ones you definitely need, no matter what, is the super trend and the Ichimoku clouds. So, but in a sell trend, to go back to our point, it would look like this. So you would see that it's below the 50, see that it's below the cloud, and you got this sell signal. It basically sold from December 1st and started consolidating December 14th. So that's 2 straight weeks of it collecting and stacking orders in the right information. So you're collecting buys. So, like, say if you had variable buying here, you would have been in drawdown for weeks. This probably would have took about a week or two. You might have would have got out here, might have took a week or two, and you would have been in drawdown making no money on this particular pair if it decided to take a buy signal during this time. But with this, you understand which way the market is going, and you can set variable accordingly. So now that you know that, the way I consider when a trend is changed is when, let's go here, and did it for a little bit. So let's kind of focus on this. So if I zoom in here, and sometimes you'll have to zoom in to really see it, but you see you had a buy signal here. That's one confirmation. You want like two. If you can get all three confirmations, you're good. So to recap, there's four confirmations that this possibly can give you. So confirmation number one would be the super trend with the buy or sell in the signals. So that's one indication. Two is the Ichimoku lines. So the blue and the red line. The third one would be the moving average. Is price above or below it? That's the question you ask. And then four would be the Ichimoku cloud. So it's price below or above the Ichimoku cloud. So it's price above or below. Cloud. And at what color? So that's like your four confirmations. If you want, you can make this like a fifth confirmation. You can make that two separate confirmations. That's fine too. So as 5 different confirmations that this trading system would give you. And then a 6th possible one would be Bollinger Bands. Is price at the lower band or higher? That's like your optional confirmation. But as far as trend changing, I use these 5. That's the 5 that I use. This one, I'm gonna just put in optional confirmation, because price can trade at a lower or higher band and still go in that same direction. But it does give you a indication that that may end pretty soon. So these are your confirmations here. That's your confirmation. So if we go back here, let me do this way. Do that. And then, okay, perfect. So move this out the way. So we're looking for our indicators. So we're looking for our confirmations. So here's one, super trend, change to buy. You don't change it just because it changed to buy. You don't just go and just start buying, because the super trend is going to give you that first indicator that it may turn around. You need another confirmation. So the second confirmation happens here. So let's zoom in some more so you can see it. So right in here, the blue crosses above the red on this candle here. So that's two confirmations. If you have two, you can switch it. But if you have three confirmations, you're really in the money. So that's 1, 2, and 3 happened at the same time. It started trading above the 50 moving averages. So that's 3 confirmations. You're all good for a buy. And now if I zoom out, from that point forward, where was I? So this was the candle. So from that point forward, it started giving you bigger buy moves. Like it was an uptrend, starts uptrending. So this was 1, 2, 3, 4, 5 days. You know, this was Christmas week, so it's going to be a little bit weird. But this was 5 days, and it gave you uptrends. So with this, you weren't in. If you were in any drawdown on buys, wasn't for a long time at all. Maybe a couple hours, but you were catching buys the entire time. So now that you know how to discern the trend and how to tell if the trend has changed and what confirmations to use, the next thing is the um, how to actually change the settings in Veribull. So if we go here, go to remote desktop here, let that load up. So if we go and right click on any chart, you can go to expert advisors and you can get back into the settings here and go into properties. So the way you currently see and change the way that Veribull is going to trade is 2 ways. So one, the default settings when you look at Veribull is it sets it to where the anticipated market type is sideways. So the anticipated market type is sideways in default settings. When you see a trend and you see it's a strong trend, you want to change it to trending. And then like say the trend is up, you want to set it for long positions. You want to enable long positions and disable short positions. Now, this is something that's unique to Veribull. When it comes to Alexander, the only way you can change what it's trading is by going here and changing the direction of the trade here. But for Veribull, you have 2 spots where you dictate the direction that it trades. Is in common and one in inputs with the positional settings. So once you have it set to that, you would, push OK, and it would start to only give you buys. If you want to switch it to sales, all you do is you would enable short positions and disable long positions to switch it to sales only. And then in here, you would also put it at only shorts for sales. That's what you would do. So this is basically how you dictate the flow of the markets with Veribull. And with that, you can actually stack the orders the way you like it and be able to rest easy and just make the money that you deserve to make. You'll increase the amount of trades you'll be able to take at one time because you're trading with the trend. You can use more pairs to trade with the trend as long as the pair is following the rules and it's a strong trending pair and you see the trend, you can place it on the chart. Once the once let's go back here. Let's go back here. When you start to get confused on if the trend is changing or if it's in consolidation like this, if this right here confuses you, don't trade that particular pair. Look for a pair that looks better to you. So right now, GBP NZD is in a strong selling trend. See how fast you're able to tell that? You know, you got the sell here. You got the blue lines below the red line. It's below the moving average. So you have all of that going for you. So instead of maybe trading the other pair, you would take that off if it confuses you and switch it to something like GBP NZD. Now, side note about GBP NZD, it is a very volatile pair. It moves a lot and it can move for you very fast, it can move against you very fast, but this is just an example. So when you find a pair like this, you just want to, look for pairs that have a clean look, like right here. You know, Euro JPY is in a buy. You have the buy signal here. It's trading above the 50 moving average, and the blue line is above the red line. With that, you could have added that. You just keep looking, and it tells you pretty quickly. Now, this one is in a transition phase. You see how it says buy. You could switch it if you want. I usually for me, I like going 4 confirmations, um, but 3 is great too. But you see how this is a little bit, it's not as clean as this. You see how this one's more clear than, I forgot what we were using. This one. See, this one is still kind of up in the air. When you look at it, you have the confirmations, but it's not the best chart. You look for the best chart so you can make the money the fastest. And that's in all how you use the variable strategy. Hopefully, this helps you make a lot of money fast. I can't promise you anything, but what it's been doing for me every day has been doing about 2 to 5% a day. You can do 2 to 5% a day off of your account with this strategy. You'll be able to replace any sort of side income or job income that you have. But all in all, there's no guarantees, but this has been working really well for our team, and I know it'll work well for you.